up in the air.
Nice. Yeah, so I can edit it wherever, so wherever you want to start is fine. Just wanted to go over a couple things with you. I've been doing a couple interviews lately with people, and I was like, yeah, it'd be cool to get you on here. So thanks for your time. Thanks for
Yeah,
coming
sure.
on to talk to me
Absolutely.
for a bit.
Absolutely.
First off, how's your week been?
It's been a good week. It's been a good week. It's been really busy, but can't complain about busy. Busy is good, I guess. So
Good. Yeah, I mean,
markets
there's not.
between the crazy markets and stuff like that, it's kept me on my toes a little bit. So
Yeah, that's one thing. Yeah, I wanted to get into first. So I'll start off. So first thing I've known Patrick for a little while. We've done a couple interviews back and forth. Or Patrick's done a couple interviews with me for his page. Wanted to get Patrick on just because he has a lot of experience. He's done a lot of different things in the financial industry, and also I think he's got a very interesting mind when it comes to markets. He's one of the first guys I saw like really posting stuff about futures and different technologies to trade futures and things. So it's very good to have you on here, Patrick.
thanks, Jason. It's been a pleasure getting to know you. I've enjoyed building a relationship with you. So yeah, let's get at it.
Awesome.
What would you like to talk about?
Yeah. So first things, you were on the floor. That's where you came up.
Yes,
Correct. Yeah. So
correct.
I wanted to get to what did you first learn that kind of was your strategy? Who was a mentor of yours, and maybe one thing you learned from that mentor as
Yeah. First of all, when I was on the floor, I didn't trade on the floor. I was on the floor back in '91 through '93, and I didn't trade and I clerked. I ran paper in the meets, and then I went over to the Eurodollar pit and I clerked over there. And then I transitioned upstairs working for a bank for a little bit, and then I was recruited from a bank to go into by a startup CTA. And that guy who started that CTA was probably one of my bigger mentors, a guy named Tom Zimmerman. Worked for his fund for a while, and just traded there. That's where I kind of learned the craft of trading, probably more than anything else. Where I learned was, I mean, I learned a lot of stuff on the floor, but I didn't really execute trades too much.
well?
Actually, not at all. I saw people doing it, but then once I moved upstairs, I was sitting on a desk with about $1.5 billion under management, and I was running that desk. So that's where I kind of learned the trade, and a lot of my learning came by fire to a great extent. Like one of the examples I'll give, literally the first time I executed a trade, this is like mid 90s, my boss was gone. It was like my first, like second or third day in the trade desk. My boss was gone. He called me from across the country and said, "Hey, I need you to sell a bunch of options, sell a bunch of calls and puts in these currencies." I was like, I had no idea what I was doing. So I mean, I didn't. And one of the wild things about it was we had FX currencies going like this on my screen, and down below was FX cash.
Yeah.
And at the time, I wasn't aware of the fact that they moved in opposite directions, but not all of them did, which is very strange because the way the CME currencies are set up, it's basically the foreign currency over US dollar, while in FX land, sometimes it's the other way around.
Yeah.
So I didn't understand, why was Japanese yen spot market, which is dollar over yen, rallying while yen futures were breaking. I was like, I didn't understand it. What was going on? So I couldn't figure out when to sell the calls, when to sell the puts. But fortunately, one of the brokers I was executing through, calling down to the pits, kind of sniffed it out a little bit, and he was very gracious to like talk me through it and walk me through it, and that's the way I kind of learned. We had a series of several brokers I was doing business through, and then one of the brokers actually on my second week came up and he dropped off like the very three first Market Wizards books on my desk and said, "Just read those. Read those. You'll get it all figured out. You'll be fine." And I did. And I still read Jack Schwager's stuff and big fan of what he puts out there. And a lot of my education's been through fire and been through reading to a great extent. So.
Yeah, I mean that's interesting, and it's always interesting to bring up the Market Wizards thing because so many people the first time reading it will go, well, that was interesting, very fun read, but they didn't tell me any secrets, and I run into that a lot because I do the same thing, like, hey, check these books out because everything's in the books, and they're like, so when do I enter a trade, when do I exit a trade, but really like you figure out what everybody has in common. There's fundamental traders, there's purely technical, there's all different types of traders in that book. all have in common is discipline and risk control. And you see that over and over again. And that's the real key to trading, I really believe. At the very least, it just keeps you alive enough to continue trading, is the risk control. Because if you don't have time and you can't put years into this, you're not going to learn how to trade very well.
Yeah, that was one of the things that I definitely did learn from the floor when I was there, was a lot of the traders I knew there in the pits and stuff like that. You'd see guys leave the pit. I worked in the Eurodollar pit most of the time I was there, and the big number there was generally 7:30 in the morning. You'd see a lot of traders, they'd leave the pit by like 8:15 and they'd be gone for the day. And you talk the next day, it's like, what happened yesterday? And it was either, well, I made my nut or I lost my max and I was just done. So, what's the point? They had that threshold in their head. It's like, I'm here to make, X amount of ticks, X amount of dollars. If I hit that, I'm going home. I'm going golfing. I'm going to go to the mall with my wife and do whatever. Or if I lose X amount of dollars, I'm done. I'm not going to stand in here and just befuddle myself and just frustrate myself, because I'm not going to trade. And what that really boils down to a great extent is the risk management. And basically their biggest mantra, every trader I knew down in the pits, was trade to trade again another day. Basically, I mean, never put your whole thing out there that's going to blow you out and blah blah blah. That's the biggest goal, is make sure you can trade again tomorrow.
Yes. And that's the biggest thing that happens with new traders, is that, exactly like you said, you put everything into it, and it's when you, after you trade it for a while, you understand that you of course need to have vision. You need to understand what the possible, like some sort of predictability. The line, the one-eyed man is king, in the land of the blind, the one-eyed man is king. It's kind of like that. So if you have something to go through, you can do well, but the risk control is above all else, because most of the time it's still a probabilities game. You're still you're not going to get every trade right. It's impossible. You're not going to probably, when you're first starting, you're probably not going to get 50% right. And even that can be very profitable. I had a year that was 40% win. I had a 40% win rate. That was my best return year. And most people most normal people would think it'd be the opposite. If you have a high win rate, then that's how you make all your money. But actually, it's the opposite, depending on your style of trading. Mine's a little bit more long term. But I completely agree. So one point you just mentioned, that you talked about managing with a firm that was over $1 billion. That's stressful. Did you have to handle allocations to other traders? Basically in different markets, different asset classes?
It was interesting. It was stressful, but probably not as, it was weird. I mean, it aged me a little bit. This is back before electronic trading was really big, but one of our dealers gave me, I had a mini Reuters thing that I kept in my belt that was basically on 24/7. I would get calls from Amsterdam from FX dealers at 3 o'clock in the morning on a Sunday morning saying they're at your stop level. So it was a little stressful.
Yeah.
But it was pleasurable, but I learned a lot, and it was across assets. We had like $650 million in FX. It was an overlay. We had, I think, $350 million in equity exposure that we handled with the E-mini, and we had another like $400 million or so in treasuries that we did in bonds. It was mostly done in options. So basically, I spent most of my time writing options and selling futures and stuff like that, and rolling them, and then adjusting the portfolio. So I had a delta adjust all the time. So I spent almost every day I was adjusting the portfolio, because we wanted to keep our hedge ratios at, like, the model was like 70% to 80% to 90% to 100%. And as options, as decay, your positions befuddle. So I would spend a lot of time coming up with option strategies to basically replace this call into the call and things like that. So it was interesting work. It was very busy work. It was very taxing work, but it was nice. I enjoyed it.
Yeah, I mean, the other thing that you bring up is, it's interesting to hear, and I know this is from market history, but I know a lot of the newer traders don't know, and I still trade a lot of FX, but there's not the same volatility isn't in FX as it used to be, And so you see a lot of people
Yeah.
kind of step away from it, or a lot of the people that you used to work with kind of either transitioning to something else, or do they stick to the FX markets? Do you know many FX traders anymore?
Not as many, although I did see an interesting stat just this morning, and I tweeted out too. The CME put something out that noted that their open interest in FX for large position traders, so basically institutions, is up something like 20% year over year, which kind of surprised me a little bit. So
Wow.
that is an encouraging sign for them. So I've always loved FX futures. That's always been one of my favorite things to trade. And yeah, the volatility isn't necessarily there too much, but they trend within big bands. Is the way I kind of look at it. You know, when they move, because I mean FX is, you know, driven a lot by interest rate differentials. When interest rate differentials start to move, they tend to move for quite a while. I mean, you look at treasuries, bonds are probably the biggest trending markets out there.
Yeah.
So when interest rate differentials start to move, it goes for a while, and that certainly plays over into FX. And you know, I'm also a big proponent of the fact that when the dollar index turns, when the US dollar turns, that is the biggest turn in the markets for anything.
Yeah.
You know, because when the US dollar turns and goes bearish to bullish or bullish to bearish, that affects everything. It affects grains, it affects metals, it affects interest rates, it affects stocks, everything under the sun. So if you don't watch FX, you're probably missing out on something. I'll guarantee you're missing out on something. And I don't care if you think, oh, I only trade softs. If you only trade softs, you better be watching FX, because if you're trading softs and you're not watching dollar, Brazilian real, then you're probably running through some problems you don't necessarily have to face.
Yeah, and that's one thing I've always liked about your trading, because I do this a lot myself, which is it's the intermarket analysis, the cross asset class. You know, that's where for me I can figure out a lot of things. If I'm not looking at the dollar, I don't think I could trade. If I'm not looking at bonds, I don't think I could trade. You know, and it was interesting. The last time dollar rallied, had that big rally in the beginning of this year, and this is a great tip if somebody's listening and cares. But the dollar was rallying at the beginning of this year, and then corn was at this very flat stage. You know, it wasn't getting beat up. And most of the time, when you could see that kind of relative strength in between the two of those, you when it actually does have that breakout's usually very powerful. And then we saw that this year. You know, so just to back up what you're saying, like, yes, you really absolutely have to watch those markets, and if you're not, you're missing out. Yeah. And not to mention all the things that they're correlated to. You know, if you're watching crude and you're not watching the Canadian dollar, you know, you might be missing something there, and like, you know, it goes on and on and on. Yeah,
and that's an interesting thing, and I've been doing a lot more work in that in the last couple of months, looking at, because the markets have grown so much. You've got not necessarily fungible, but you have got very light commodities traded across the world to a great extent. And FX comes into play in a much bigger way that way. I mean, you look at corn, you look at Brazilian corn down at B3 versus Chicago Board of Trade corn. A lot of the differential there, it's based off of FX, most certainly. There's almost no question about that. You know, China's going to buy more corn or buy more wheat and soybeans down from Brazil when Brazilian real is really weak.
Yeah.
And, you know, I was looking at this the other day, actually, at iron ore. Iron ore has been outperforming at SGX a little bit over the last few weeks versus in China. Trying to figure out why that is. Is it an FX translation thing? I'm not really sure. I haven't really come up with a reason for it yet, but I enjoy looking at those stuff and fun trying to sniff out why that's going on. You know, I look at just a simple thing. You look at like the iron ore one, looking at iron ore at SGX and its 50-day simple moving average versus iron ore at Dow Commodity Exchange and the 50-day simple moving average. Like, why is one way above? Why is one a little bit below? It's like something's going on there.
Yeah.
Those are tradable opportunities without any question about that. But the question is, you got to figure out which side to take and where to go with it. But that creates a lot of opportunity.
Oh yeah, absolutely. And you know, you're bringing up the commodities, and interesting last year into this year, you know, the natural gas market they were all, you know, in all different types of phases. You know, basically, like if you looked at a chart of one to the other, I mean, it was insane. So I mean, it's been very interesting. Lots of arbitrage plays right now. the commodities markets, basically across the board.
Absolutely.
But once again, it's a thing that I think is very cool about what you do with TT, which is you guys posting and educating all these things all the time, kind of showing all these different markets. Most new traders don't get access to those things. There's even things in my group that I trade that I don't talk about the SGX trades because I know nobody else is trading it, but I know also the market data is extremely cheap. It's very easy to trade. They're very liquid markets, and I don't understand why people don't trade them. All those things are there and available to us. And then, futures in general being kind of mysterious to people, where most people don't trade it like we do. So it's also very cool that you guys are also kind of always posting and pushing that sort of an angle.
Yeah. No, I appreciate that. I try and get a lot of stuff out there, get a lot of stuff, and it gets good feedback. It's because that's part of it too. I mean, like I have access to every futures market in the world pretty much.
Yeah.
And I can share information what's going on out there that people don't necessarily have access to because they got to pay for that. And I'll share a story. I had an econ professor in college who he was a ham radio kind of guy. He used to listen to a ham radio. This is back in like the 80s, so it's a long time ago when we had things called ham radios and CBs and stuff. But he picked up a cross currency or like a cross wave of some radio broadcast from Australia one time, and he heard that, and this is like a Friday night, and he heard that there was going to be a really, really bad problem with the sheep herds in Australia. I mean, herding is a big thing over there. And he had no idea what to react to, and he just think about himself. I was like, what? Don't they have like at the time the Australian Securities Exchange had what was called a greasy wool futures contract. It's like, I wonder, and they were talking about that on the radio, on the ham radio thing you brought up. It's like the greasy wool futures contract should dump tremendously. And it's like, I have no way I can do anything with that. I can't really access that. But what I can access is he could access CME and use their Australian dollar futures at CME. It's like, well, if greasy wool is going to go down, and if sheep are having problems, they're not going to get as much of a profit of sheep and stuff like that. Australian dollar is going to tank, and he was right. So he went in that Sunday night and called his broker and sold Australian dollars and did really well. But it's something that not enough people have been thinking about it, but it's something that I enjoy doing is looking at the cross markets, looking at what's this market moving over here, how's it going to impact these other markets over here.
Yes,
that's a way I like to look at it. A big deal. I don't necessarily recommend that for a beginning trader. I think a lot of times for beginning traders, they need to look at one market and one market only and figure that out. They've got to get their niche to a certain extent, but as you grow into a more macro type of mindset, it's fun. I enjoy doing that macro analysis type stuff.
So that's one thing that's a debate in my head all the time, which is working with newer traders a lot. I run into this. I do so much macro analysis, and I really can't focus on anything if I'm not doing that. So if I'm sitting there looking at, if I'm just looking at crude, I couldn't put on a trade without seeing everything. And so, I start basically any of my letters, like I start completely going through the market every time. And also I don't really because I mainly stick to futures, I really don't do single stocks at all. I know a lot of CTAs are starting to go that direction where they're starting to play single stocks a lot more. But for me and what I do, the deepest I'll get into it is the sector futures, and that's about it. And to me, I think it's almost you either gravitate to one or the other, and one you might find easier than the other. For me, really understanding intermarket analysis was really my edge in getting good at trading, and I didn't do very well until I understood there was these major forces, things that cause bull markets, things that cause bear markets. Because you don't. Sure. When you first start, you look at a chart, and you should exactly what you're saying. If you can figure out one thing, you can figure out the fact that it has an uptrend and what makes an uptrend and what you can mechanically say is an uptrend, that will help you. But in my opinion, you can kind of go across the asset classes, use that same sort of tactic. It might be a little different in certain things, but if you can really put that together, then you kind of have this global view. And this will really help you to put on the right trades, because it's really hard. Especially look at this year. We get into 21. growth in tech, which have done phenomenal all these years, just started fading, and the reflation trade started taking over. That was kind of
Yeah.
easy to see if you do any relative strength analysis, if you do any fundamental macro analysis, you can see that that was a very big possibility. But the new traders really had a big problem. They're all getting hammered right now because they're not understanding that macro view. And so that to me is one reason why I think it's important to understand the macro almost just as much as it is to just understand how one thing works.
Yeah. And I agree with you. But there's something like crude. There's so many variables that go into crude that it's just ridiculous. You got to look at the shipping rates. What happens if what if this line goes down in Australia? There's so many things that impact crude that can be just it's mind numbing. Which is why. And I understand your approach entirely. You understand the macro, but again, I can reflect back to the pit trading guys and stuff like that. Guys that are just going for ticks here and there that I knew guys in the dollar pit, and they used to talk about this as a bond pit too. They had no idea what the underlying even was. But again, they were scalpers. They're trying to buy 15, sell 16s. That's all they care about. So that was their entire life. And it's a completely different trade. And trying to do that type of trade now, that's a speed trade. There's no point. You just can't do it. So everyone really has to go into. I mean, the market moved in a big way over the course of the last 12, 15 years into more of a swing trading from scalping type of industry anyway.
Yeah, and that's another thing is talking to you is wanted to ask you about the systematic managers. Like I know that there's been a lot of, and I study these guys because I consider myself a trend following trader, even though I have a different style than most of them. And I was looking at it, and you basically hear the podcast that they're on every single week, and they're talking about the fact that they're having so much trouble with these markets, and now they're kind of coming into some great returns at the moment. What do you think about the trend followers and what they possibly do right and what they do wrong, especially over the last 10 years have had really bad performance, hard performance? And I know know a lot of those guys as well.
Yeah, I do. And that's you look at the trend followers, and that whole niche, I wouldn't say started, but really got its blossom with the turtles, which started here in Chicago, forever ago. And I know one of the guys that you've talked to a little bit, Jerry Parker, was one of the original turtles.
Yeah.
And their philosophy is it's very solid. I mean, they mathematically came up and realized that market's trend. They knew market's trend. They knew that they're going to go this way for quite some time. They know that it's cyclical, where it doesn't always stay that way, and it makes sense. And I enjoy a lot of what they say too, because it frees you up quite a bit. Like you've been in some of those conversations, I think, or one of them.
Yeah.
And one of the clubhouse things, they talk about the same thing too. They were talking about lumber, and I chirped in a little bit to say, oh yeah, that's congratulations to you. It's up really big today, and like 2 or 3 of them were like, oh okay, they had no idea because they don't look at the screens.
Yeah.
They have no idea what's going on in the marketplace. They don't even pay for market data. They just have end of day data. They read it from the paper, whatever it is. They don't care.
Yeah.
And to a degree, I envy that to a certain extent. Me, I go freaking bonkers if I don't have my trading screen with me at all times.
Yeah.
I drive my wife crazy because we're out shopping stuff like on like a Sunday night, and I'm looking at my phone to see what's going on in the markets.
Yeah.
But a lot of the trend following CTAs, they just don't. They don't have to. So it's all there, and I totally understand that. I envy them to a certain extent for that. So that's good. But what it really goes to, it doesn't matter if you're a trend follower. It doesn't matter if you're a contrarian reversal, reversion to the mean type of trader. Just have a process. Have a process. Have a set of rules. It's people they're trying to chump change and throw things out there all the time because they just think it looks good or feels good. That's where you tend to get in trouble. But when you have a process and you have a set base of rules, and those rules could be scalping, it could be swing trading, it could be trend following, whatever it is, just stick to your rules, man. You're gonna be a lot better off mentally and physically and pocketbook wise. And mentally, and I stress the mental a lot. I'm working on a paper right now about mental capital.
Yeah.
That talks about that a great deal. Because it's kind of like people who trade without stops and stuff like that. Sometimes they'll say they got a mental stop. Sometimes they say they just don't use a stop. But it's like, man, the mental capital you expend when you're not willing to have that stop level in there to get you out, it's just horrific. Because I've been there. I've been there riding losers and trying to figure out how I'm going to get out of this, how I'm going to trade out of it. Should I add more to it? Should I double down? It's like that mental capital. It's not worth expending that. When you have a system that says get out when this happens, you're going to save yourself an awful lot. And I'll guarantee you, your family's going to be happy too, because you're going to be a lot less stressed and a lot less torn up all the time. So preserving that mental capital is probably more important than preserving that physical capital of your trading account size.
No, that's great, great, and that's exactly how I think about it as well. Because I'm also very I'm very similar to the trend followers, where I do look at my account at the end of the day. That's the only time I'll look at it. I don't look at the cash in my account. I have it turned off. Like, certain things that I do that's very similar. And also, you're right. Like, if you cannot deal with the mental drawdowns, that's the one thing that people don't understand. Look at something like Bitcoin. 2017 is a good example. You have this thing that goes to 20K. You talked about people getting numbers stuck in their head earlier. And that's what happened in that one. They got to 20K and then it came off of it. They were like, man, I will sell if it hit 20K again. And then, it continued to go down and down and down. And every normal person would say, well, then you just hold on to it, and it's like, you don't know how you'd react if you saw, 500,000 gets cut to like 150,000. Like, nobody knows how they'll react in that situation. And most of the time, the reaction will be bad because you're going to be very emotional. You're going to be stressed out. And you traded too large. You did everything wrong at that point. So most of the time, if you don't have that stop in, you don't understand where you're going to get out. That's where the stress really comes from. Is, to me, I don't have, people talk to me about it all the time. Oh, I'm up all night. I put on this trade and I'm so scared. And number one rule, like you would say, or anybody would say, well, if you're scared overnight, your position is too big. And they do this over and over again. For me, I could care less about any position that I put on. If it goes against me, it's 1% of my account. I know that my stops are always set. That's one thing that I will not mess with. There might be a time where I put on a trade that I shouldn't. There might be a time where, I do something stupid. Probably won't. I'd say, it's less frequent nowadays, but I think we all still will forever do something stupid here and there. And, I'm nowhere near as experienced as you or other guys, so I still do plenty of stupid things. But if you do those, go ahead.
Go ahead. I was going to say,
yeah, go ahead.
I was just going to say, it's one thing that screen trading is kind of killed off a little bit. A lot of guys in the pits, the traders that I knew, they wouldn't know their P&L at all. They would have no idea what to do. They wouldn't even know the position. Literally, they wouldn't know if they're long or short, because all they're doing is trading price. Yeah. They just know what they're supposed to be trading. They know they're supposed to trade when this happens, that happens, and would not even know the position, whether they're long or short, more or less how many they had on the time. They had card checkers that were actually kind of track stuff for them. They might ask them occasionally, where am I? Where am I? Where am I? The where am I was that their trade checker actually saying, oh, you're short 50, you're long 500, because they're just trading price. They just know what the market's moving. They know they've got to get in or out, and they've got to do whatever, and then they kind of settle it out. And with the screens, that kind of goes away because it's right there in front of you. Mm-hmm. But one of the things when I was working on X-Ray, when I was a product manager over there, some of the surprising things people would ask for, traders actually asked for the ability to turn off their P&L. They didn't want to see that. They wanted to hide their position. They didn't want to see that. They'd have MD Trader, which is kind of the market down to trade off of, and they didn't want to see anything outside of just price. All they wanted to see was just the market, the bids and offers. That's it. Price, bids and offers, and the bid offer quantities, and that's it.
Yep.
Because everything else to them, their P&L, their position was totally irrelevant.
Yep.
When they start to look at that, that's when it screw up, and all they really cared about was order flow, what was going on in the marketplace. And I think that's is a great curious quality to that, and I love that. It's got to be nerve-wracking, but that's the way they grew up. That's the way they learned. And that's why they own, houses in Hawaii and Florida and Northern Michigan and Chicago. So.
Yeah. Well, so I learned from my great uncle. So he was very old school in that sense, now granted I was young. So like the things he was talking about, I always wondered if they stuck in my head, and they really did. but it was like, I realized some of those things I certainly picked up from him. He was very good at understanding that the way you mentally will react to things will be terrible. And most of the time, if you can turning my P&L off, you're right. It's to do with, if I'm doing the trades right, even if they're all calculated still. So, but my loss is calculated for trade, my size, position size, and everything. So if I'm doing everything right and I'm getting my win rate to the point where it should be based on my back testing, then I don't need to see that, or I'm just going to drive myself crazy. And that's what it took me a long time. Also, like I'm acting like this came overnight, but this took me a long time to be okay with this. My girlfriend, I used to drive my girl nuts. Like everybody nuts around me, because it was something I was looking at all the time, doing all the time. And then one day I realized, like, I could spend a lot more time researching. I could spend a lot more time doing, looking for the next trade if I'm not sitting there focused on the one that's already in my account. And that's the thing. Once you put the trade on, if your risk control is set and everything, that's all you need to do. Because if you're sitting there focused on it, you're gonna doubt it, you're gonna change it, you're gonna do all types of things, especially doing the type of length that I do trading. Because I'm more of a longer term trend follow. Well, I guess there's a lot more long term guys than me, but I kind of having that like 4 to 8 month time frame. Normally, you sit through some pretty nasty periods. Like lumber being a very interesting, easy one to see. Now we're out of that trade at the moment, but it's some of those trades get really nasty in the interim. So that's what I think makes it easier in a sense to do that. But once again, it's not everybody's personality type is the same. I knew that was my problem of looking at the screen. I would do stupid things.
You call an important point. You have that mental capital. You can now expend that in some other place.
Yeah.
Than trying to sweat out and figure out, well, is my model wrong? Should I do something else? No, your model's right. If your model's not right, you'll find out soon enough.
Yeah, that's
work on something else. Maybe you can spend that mental capital working on a model, whatever. But you know what? Just leave that trade, let it go. You got your stop in. Be happy. Go to the park.
Yes, absolutely. So what do speaking about risk control, there's so many people who have the constant debate. I love I like trailing stops. And then you have people who hate trailing stops. And in my opinion, most of the people who hate trailing stops don't understand how wide, especially in commodities, and you know this very well. In commodities, sometimes you need a stop that's 30%. If you're really riding a big trend, your stop, like for example, Bitcoin, my trailing stop was 35%. Also, interesting fact that Patrick and I had a conversation not too long ago that didn't get to air, that we actually were talking about the top of Bitcoin. I don't know if you remember that, Patrick, but we actually nailed it to the day. That was cool.
Yeah, we did, and unfortunately the audio was too poor, and that would have been our shining moment. But no. But the price when you live in the North Woods with poor Wi-Fi, so
it happens. I mean, it's a beautiful area. Be glad to be there. But so what do you think is a good risk rate? You said stops. Would you suggest a newer trader use trailing stops, or normal stops, or just an exit technically?
I would probably stay with, there's nothing wrong with a trailing stop. You can certainly have a trailing stop. I've got a couple different models. I use trailing stops and some I use hard price stops. And reason being is a lot of it has to do with the volatility of the market itself. And for that reason, I just kind of know, that there's different price points that when a market's going to turn sometimes. So it's tough. But for a beginning trader, I mean, you definitely have to use a stop. And I don't think there's anything wrong with the trailing stops. So I guess the trailing stop certainly does work. And like I said, I use them myself in some of my models, mostly in my automated models. Algos, I'll use trailing stops and try and follow them through. So I'd probably, if I was going to pick to tell someone who's starting off right now, I'd probably say I go ahead and go with that, because you're gonna be frustrated if you don't. I mean, there's particularly with newer traders, there's nothing more frustrating than taking a 20 tick win and then seeing it go up 50 more ticks after that. It's very exasperating.
So there's like you kind of got into it a little bit, but I'll add to it and ask you the question. So when you're building these models, basically your algos, when you backtest them, if you have let's say you're backtesting one for corn. Let's say you put in a 5% trailing stop in one of them, and then the other one you put a 20% trailing stop on. What most likely would have the higher, the better return? The 5% trailing stop or the 20%?
That's certainly going to depend on the market. And corn's a pretty decent trending market, so you could probably have a better return with a 20% trailing stop, to be honest with you, because it does get volatile. While it gets volatile within big trends, FX doesn't really trend quite as much. It tends to go in bands. It trends, but it goes in big bands, so you probably want tighter stops in there. Treasuries, you probably go with tighter stops of 5%. So it really depends on the underlying crude. You'd probably have to go to 20%. I haven't done any real analysis on that. I'm sure other people like Michael, Mel could probably give you more insight on that, but I don't really know what would be best, to be honest with you. I wouldn't want to put a number out there.
You actually, so I've done all that research, and you just said it without even, like you said, you haven't back tested it, without even back testing it, you hit it perfectly. That's one thing I bring that up because our group, the members, talk about this a lot. They'll get into trading, they'll get into futures, and they'll say like, I'm going to trade something like palladium with the tightest stop ever, and I'm like, you're going to get stopped out a million times.
Yeah.
Even a 5% trailing stop on something like that will just wreck you. And so you run into this all the time, and that's why I wanted to ask you that question, because every market has a different volatility. This is why ATRs and different things work very well. Obviously, you have to understand how to use the ATR, and a lot of people think it's one ATR. You know the difference, but most people use like 3 or 4. But you run into that over and over again, where people will be like, "Well, I'm gonna put this portfolio together. Let's say it's $100,000 to make it simple. I'm gonna make all my stops, at 1%, and I'm gonna take a $100,000 position, $1,000 out of 100K. I mean, I come into this all over and over again. So I thank you for answering.
Sure. Yeah, and you brought up ATR, and I'll be honest, ATR isn't something I've used too much in the past, and I've been fiddling with a lot in the last couple of weeks. I'm doing some more modeling on ATR right now as not only a price entry rule, but also as my stop rule. So
yeah,
I'll let you know how it goes.
Yeah, no, I mean it's a very interesting tool, because it's all based on the fact of what you just said, which is there are different assets with different volatility, and when you
it adjusts for each one, which is good. So yeah,
and so that's a good way to start it, and then not to mention you got like you said earlier, putting it under certain price levels, because there will be times where a trade will, for me, I might be entering something that would be invalidated very quickly. Something like maybe a gap over a 200-day, something that could be invalidated very quickly. So sometimes when those things happen, you want to have a different stop. So there's lots of different ways to look at that. So that's cool. Okay, one more for you, Patrick. Basically, I'd like to end everything with, what would you tell a younger version of yourself, a new trader, somebody? What's one thing they should work on as new traders? What's something that you see that happens a lot in new trading?
Humility. Be very humble, realize that you know very little, and try and learn something new every single day. That's probably the biggest thing. I mean, I got into the market, like a lot of pit traders did. They're former athletes, becoming extraordinarily cocky and extraordinarily confident, and that creates a lot of problems. You got to come in with humility. You have to come in and say, hey, I don't know this in years. I think I do. And, I go into almost any meeting I go to right now with a customer, with a vendor, and, I pretty much open up and say, talk to me like I'm a 2-year-old, talk to me like I'm a 5-year-old, talk to me like I know absolutely nothing on this subject at all. 20 years ago, I wouldn't have been that way. That's always, never think that you know it. Never think that you've got this, because you don't. It's changing, it's morphing. Always be prepared to learn more and keep progressing, because it's actually, What is it? It's not a Bible passage, but yeah, no, it's something like that. It's something I tweeted yesterday. It's actually from Grateful Dead song. I was thinking Bible
Oh,
passage,
nice.
Grateful Dead song, but it,
Close.
but it's it basically goes along that when the road is straight and clean and all the roses are pretty and everything looks really great and fantastic, that's when you got to be nervous. That's essentially, I want to find that quote now. I'm not gonna, but that's essentially what it is. That's when you really kind of got to be nervous. When you start feeling confident, when you start feeling that you've got this, that's when things start to turn. So be very careful about that. Always be wary. Always be nervous. Always be somewhat checking your back.
Yeah, and that's great advice, and that's something that I think everybody who started trading has dealt with the overconfidence. Like I think that's the biggest thing. That's why I have a rule sheet that I told you about, the NA2 trading rule basically, and the first one being we are powerless over market direction. And that's like that's the one thing that I think every single day, like, or if you go to bed and you're like, well, this is going to be bad in the morning, like you have to just understand that you're not in charge of that. That's not something that's happening to you. Like it's not, you have to really separate that from yourself.
Yeah.
And I like the thing you brought up about athletes. There's something that I've noticed so much in trading is that most people I talk to have some sort of athletic background. And I thought it was interesting. I Googled your LinkedIn to prepare for this today, and I saw that you played football. And I think that's really fascinating because I see that over and over and over again. It's and not to mention it's most of the things. It's the sports that people get knocked down a lot where they get into trading.
Yeah.
So it's like, and you as a kid when you get into sports or something, you fall a lot, and it's not something that frustrates you. It's just something you kind of understand has to happen. And when you get good at it, and then you start trading, and you have that confidence, and then you don't think these things are supposed to happen anymore because you proved yourself, you've done so well. But trading's a whole different thing, and the first time you get into it, you're playing with it's the only thing, like you could never start playing football when you were 5 years old, and then they'll put you on an NFL game. It would never happen. But trading, that happens every day. The new trader is playing with the professionals every single day. So you're right. I mean, and that's the thing that you see the big difference over people is that it's kind of like when you talk to a professional and you're like, hey, I remember talking to Mitch, and I told you about this too. The first time I had a conversation with her, the first thing she did was send me a risk management book. Like, hey, here's this risk management book, and you're like, how am I going to make money with this? Like, you have this cockiness in your head that you think you know something, and the market loves to just beat that out of you over and over again until you're like you are, where you're I really listen to experts, and if it's in each field, what are they doing? I'm not talking about trading per se. I'm saying if I call somebody to do some work on my house, I'm going to listen to them, if I can vet them out and trust them, and you kind of learn this through trading, to really be humble and really understand that you don't know everything. So I thought that's beautiful what you said.
Yeah, and you kind of got to make that switch. It's like you're not going there to trade to make money. You're going there to trade to not lose money. And when you look at it that way, the money's going to come. When you learn how to protect the downside, the top side's going to come. So particularly, with trend following, it's just the way it is. You just have to understand that, if you protect your downside, the upside's going to happen. So.
Yes, and what you said is also correct. Brings me to one more thing that I'll talk about is, so last year there's so many people who got into trading, because the market went straight up, and they all, every single friend of mine who's never traded before is sending me screenshots of how well they're doing and stuff, which is great. I'm happy if they're actually making money. But I still had more people saying, I had a friend who was like, yeah, I sold my house, and what do you think I could do with $150,000? And I was like, I don't know. It's like, well, ballpark for a year. I said, your first year trading, 75,000. He was like, make 75. I was like, no, probably cut it in half to 70. And he got so mad at me. He hasn't talked to me since, but it's like, that's the truth.
Yeah, it absolutely is. It absolutely is. So.
We've all like that's the thing when you start, we've all donated to, you know, the school of trading. Everybody has done that, and that's just
Positive mission.
what it is. Yep. So, all right, Patrick, thank you so much for your time. You got anything
Absolutely.
else you want to talk through? I'd love to get your brain on. So I've seen some of your posts lately on LinkedIn that you've been writing. It's been very interesting stuff. Is there anything you are interested in talking about? Your Bitcoin one was kind of a big hit too.
No, what? Yeah. I've made some calls on there that have come up pretty well. So, you know, I'm working some papers right now that are going to be interested in coming out. One is, I've kind of ventured it a little bit. One has to do with actually life's supposed to be hard, and that when you understand that life's supposed to be hard and that you're supposed to learn from that, it gets a little bit easier actually when you kind of get a grasp of that. And trading's supposed to be very hard. That's kind of the trading is it's extraordinarily hard. We all hear those numbers, you know, 90% blowout and things like that. So it's very hard. And when you understand things like that, it's painful. It's painful. You're gonna get discouraged. You might hate yourself. Somebody else things you to go through, but it's the price you got to pay. And it turns around. So keep the faith, stick to your rules, work hard, sleep well, be nice to your loved ones. You know, meditate, pray, do those good things. You'll be fine.
No, I mean that's well said. It is hard. You know, that's a great lesson for newer traders, especially the younger generation, because we've become a very instant gratification society, and so as we see that, we're seeing more and more people think everything's supposed to be easy, you know, and not to mention, like you said earlier, it's also the trade of learning to be humble, learning to say, hey, I got this wrong. I mean, I just went riding. I go riding like once a week. And this is in Cleveland, so I see a lot of friends when I go there, and they all tell me about their crypto gains. You know, like, and then like last week, they're still telling me about their crypto gains. So I was like, wait a minute, I said, you guys don't have the capabilities of going short. You know, like what? How are you guys making money right now? And they'll tell me, oh, well, I made it all this much, and you know, and when it ran down, and you know, like it's like they're lying to themselves over and over.
Yeah.
And it's the same thing, like, you know, if a trader's sitting there and, you know, they take $1 million to $5 million, you know, and then they come all the way back to $1 million, a professional would say, I lost $4 million. But newer people who get into trading, if they do that, they'd say, oh, well, I didn't lose anything. I'm back to $1 million, you know, and like, it's always important to protect that money the whole time and understand that is real money every step of the way. Like whatever you're doing, it's real money. So.
Yeah, absolutely. Absolutely.
Oh, cool, Patrick. Thank you so much it's been great talking to you as always.
Yeah, thanks, Jason. I appreciate taking the time, and have a good day, trade well, and get out there and ride the bike today if you can. It's nice out, so it's nice here at least.
Yeah, it is here too. So sounds good.
Good.
Thanks, Patrick.